All right, y'all, back to work. Boy, markets are messy right now. Everyone's waiting on trade deal updates this week, but I got some good news for us. Because when you combine the hourly time frame with the tick charts right now, we have the recipe for what I call a slingshot reversal. These types of reversals are oftentimes our biggest winning trades in our morning trade room. I want to talk about tonight how to find them, how to trade them, how to make a bunch of money off them. So this will be a great video from start to finish. So enough of the intro. Charts are ready. As always, thanks for tuning in and watching my stuff on these YouTube channel. Let's now dive in and make some money on a slingshot reversal on Wednesday morning. S&P SPY ready to go tonight. NASDAQ triple Qs are always ready, aren't they? I have three important clues on the charts in front of me that are telling me where I think the money is made tomorrow. The first of three clues, we are definitely overall bullish right now on the S&P SPY, bullish overall right now. NASDAQ triple Qs. Remember, I like to use these hourly charts, the higher time frame, as an overall directional filter. The first big clue for tomorrow is we are definitely bullish still on the S&P and the NASDAQ. The second and third clues are down on some faster time frames, some tick charts, because when you combine these hourly charts with the tick charts, that's where the magic all comes together. First things first though, let's check schedule for tomorrow. There really isn't much news all week this week. There's not much to worry about tomorrow. A little bit of FMC announcement there on 2 o'clock tomorrow, but I don't care about that stuff. Everyone is watching right now for more updates regarding trade deals. We're seeing a lot of headlines right now coming out of the White House. So hopefully good things coming later on in the week. So no news tomorrow to worry about. Will we get more updates tomorrow? Only time will tell, and we'll keep our eyes on that tomorrow morning in our trade room. Back to our charts though, because like I said earlier, when you combine the hourly chart along with our tick charts, that is where the magic comes together for a slingshot reversal. Now, real quickly, if you're watching for the first time right now, all the time frames in the upper left-hand corner, these are all going to be tick charts going forward. That is a 7,000 tick chart. And in case you're tuning in for the first time on the channel, welcome, welcome. That is the 21 EMA. It's the only indicator we need to find consistent, repeatable, winning trades. Now, there's two big clues right now on this tick chart. One clue, we still have that strong run down from Monday afternoon. Now, why is that strong move important? Well, because anytime we see a strong move down like this, we know all of that momentum is going to try to take out that low before we resume the overall bullish trend we saw earlier on the hourly time frame. That's a huge clue for tomorrow, but is what is arguably the biggest clue. And the reason for a slingshot reversal is this bear move down into a trading range. Now, why would that be a big clue? Well, because what do ranges do? They act like magnets, and ranges, they love to rotate back and forth. And we use things like triangles or expanding megaphones. We use things like pendulum swings, the amount above, the amount below. So think about this. If we have a bullish market overall on the hourly time frame, and I have a trading range on the faster time frame, that strong move down is begging to get hit before we resume the overall bullish trend. This is where a slingshot reversal comes into play here. Now, we may not get it. We may run this thing going higher here because, of course, don't forget we're an overall bull market. I have to be very careful, though, if we run higher because those all-time highs, they're right up overhead. I want to talk about going higher here a bit later on in this video because that can be a bit of a challenging topic. We'll talk about that in a few moments. But first things first though, let's talk about that slingshot reversal up off that low because you know that big move down, it wants to retest that low, and you know that range, it wants to what? It wants to rotate back and forth. So let's break it down because there's a couple different ways you can time the entries on this slingshot reversal. First one's first is a classic bear trap. I would love to run lower And you know me, guys, right? I'm not going to blindly buy down here because I don't have a crystal ball. It may go a bit lower. I don't know how far that move down will go. What I do know, though, is this is the last place you want to sell. So once we start pulling back to that moving average, I'm looking for a bear trap. Let the sellers try once. Go higher, try twice. Why? Because now I know where the stops are. Now I know where their pain is. Remember, if you're caught short, what happens when you get stopped out? You buy your way out of that short position. That is a bear trap. Now, where's the market want to go? It wants to rotate the amount below, the amount above. It wants to rotate now. It wants to slingshot now off of that low. Now let's add to our winner. Guys, the easiest way to make a lot of money in trading is to add to these bear traps. To do that, what I want to see a strong run up, shallow pullback. This is very important. This is the big secret clue. It's a shallow pullback that barely touches or misses that moving average. Once we see the separation, bring off that low, and I want to see a higher high in price. I'm getting in right below that low. We call this a bear trap. And an add-on. Again, add more to that trade as it rotates up off that low. And if there's one scenario where you must leave a runner, it is in these slingshot reversals, because again, as it rotates off that low, it resumes the overall bullish trend, and this thing can get very, very good very fast. So leave that runner going higher. Now, let's talk some variations of this, because this is kind of the dream scenario for tomorrow. For example, we may not get that bear trap down there. There may be so many buyers down there, it just whoop and runs right back up again. If it V bottoms and bounces back up again, I want you to start thinking about finding a new channel and buying the first touch of the low of that channel. The trick is find that new channel, draw off the highs first, down around that low, then look left and find some prior swings. The money is made on these V bottoms like this off the first touch of the low of that channel. In my trade room, you'll hear me say first test is the best test. I want the first touch of the low of that channel, and I want it to be just below that swing. It's not required, but it's always the best ones are just below that swing. Bottom line is first test is the best test off that low. And again, leave that runner, leave a runner in a slingshot reversal. I have two more variations of this I want to talk about. For example, a lot of times what happens is we'll get that strong run down. We'll get a beautiful bear trap. Bears once, bears twice. We squeeze those stops back up again. But what do we know about ranges? Ranges, they love to break out pullback. So sometimes I'll get a 1-to-1 first target, but instead of this thing rolling higher like this, it holds the underbelly of that range, and we wind up seeing another leg going lower. This is a winning trade, right? We're getting our 1-to-1 first target. Stop moves up to point of entry, just like I teach in our free video classes. But again, we don't rip, right? We don't slingshot all the way. Sometimes that strong move down, it wants to retest. Now you tell me, is this a good place to look for shorts? No, it's not. We may seem very bearish right now, but take a step back. We're overall bullish on the hourly time frame. That's our directional filter, right? So while a lot of rookies think this is a reversal, it's almost never a reversal. It's simply we call a retest trade. We run down, we pop it up, and we retest that low. Now, on a retest trade, it's the same exact thing. It's another bite at the apple. Trap those bears in once. Trap them in twice. Remember, always a higher high. Why are higher high? Because I want to make sure I have a lot of stops. I can juice those stops, squeeze those stops for that run higher. And remember, don't just kick your feet up on the desk and bask in your P&L. When this thing starts working for you, remember, this thing wants to rotate for us. So add to our winner, higher high, get in right below that low, look for that separation and add to that winner. And again, let that sucker run. Now, I have one more variation of this, which might be our best option for tomorrow. I'm going to cover that in 2 seconds. Before we do that, though, let's pause for a second, because I know most guys and gals watching right now, you know these patterns already. You're making money with these already. But if you're here for the first time, if you're watching for the first time right now, this might be a brand new language I'm speaking, a brand new strategy I'm using. So don't you worry, I teach this entire system in my free trading course. In fact, I have a ton of examples of bear traps, add-ons, retest trades like these. Guys, the markets are way too good right now not to be making consistent profits. So what I'll do is I'll put a link up top there for you, upper right-hand corner, hit that little link that popped up right there and watch that free trading course. Because the strategy I teach in that short video series will teach you a simple trick we use in our members trade from each morning that literally tells us exactly where the winning trades are going to be each day. More importantly though, guys, I want to teach you my 4 favorite entry setups so you can time better entries, make a lot more money. Guys, if you're still missing the best entries each day, if you've lost your confidence in your current system, your current strategy, what are you waiting for, guys? Pause the video, hit that link that popped up right there, watch that free trading course, because you're gonna love all the trading examples I include. I have a ton of trading examples of all the entry patterns I'm teaching right now, all included in that short video series. The best part is it's completely free for you. You're gonna love that free video course. Now, also to keep in mind too, I'm gonna put all the important links you'll need to learn the entire roadmap. I'll put those below this video, the description of the YouTube video. Start first on the free video course. Most folks start making money all on their own, all from that free video series on our website. Start there first, and don't forget too, I post a ton of videos, charts, mindset stuff, updates during the day on Twitter or X. If you're on the X platform, give me a follow. Again, all the details you'll need, guys, to learn the system, hopefully earn a lot more because of it. I'll put everything below the video tonight in the description of the YouTube video. All right, where did we leave off? I wanted to pit stop there for a second to make sure everyone who's watching for the first time right now knows where to go to see more examples of this and learn the actual roadmap, because I can't teach everything, unfortunately, in these videos. We talked about that bear trap, buying it back up again. We talked about that V bottom. We talked about the retest trade, right? The retest trade. And again, I will talk about if we go higher, because we may not get that slingshot reversal. It may go higher, but I'm warning you right now. If we go higher, that's a lot more challenging, because again, that move down is still begging to get hit here. So there could be some bull traps up there. We'll talk about that as we go deeper here in this video here this evening. One more thing I want to talk about. It's a bit more of an advanced tactic. My members might be upset at me for sharing those details on this video, but one thing you must remember is that anytime we see a range breakout, the breakout leg is the measuring leg. So one more variation of this I want to talk about tonight is if we see, for example, a rundown that may try to complete that pendulum swing, right? That's one leg. A second leg going lower. What I want to remember is, for tomorrow is the breakout leg is always a measuring leg. So let's say, for example, now we see a strong run down. We pull back and we make another leg going lower. This is going to feel like a breakout. But remember, we're overall bullish on the hourly chart. It will take a lot more than a measured move breakout to turn this into a bear market. Again, we know that low is begging to get hit right now. So if we break out one leg, two leg, I will be looking for a measured move down here. And once I find that measured move, it's the same exact thing, folks, right? Same thing. I mention this because I have a lot of, I've heard people say before, they get fooled by this part of it, right? Where it's one leg, the second leg feels very convincing, but again, find that measured move and trap those bears in. Trap those rookies in. Bears once, higher high, bears twice, squeeze those stops. And again, if there's one thing you learn from me in this video, watch that separation, that higher high in price, mark off that low, and keep adding to that position. What I do is, and the way I teach this in the free video class is, I take a 1-to-1 target, I move that stop up to point of entry, and I then go in and add another position on right around that low right there. Bear trap, add on, and let it run for that slingshot reversal off of that low. All right, I think I've covered all the variations on this right now because you know me, I don't have a crystal ball. All I know is this is a great place for a bear trap down there. Now you know some different entry tactics I'll be looking for tomorrow, and we'll see which one that we get. Now let's talk about the more difficult of the two. If we go higher here, the NASDAQ, I hear you, NASDAQ. NASDAQ's getting lonely over here right now. Let's move this lesson now over to the NQ and the triple Qs here. It's very easy to see right now. We are way, way bullish still here on the NASDAQ. And remember, I use these hourly charts for directional filter, right? Don't get into the weeds on this. I know I've got some ranges. I know I got some levels on here, but in all reality, I don't use them very much. I just use this time frame as a directional filter. Do not forget the overall directional filter right now is bullish. Now, before I dive into the tick charts, if you're enjoying this video tonight, please help me grow this channel by hitting that like button and make sure you subscribe. I know we're all busy people these days. I know it's a couple days after a busy holiday weekend, so I appreciate you guys tuning in, staying up, and watching my videos here tonight. So again, thank you so much for all the love in the comment section, all the likes, all the subs, all the ongoing support. And I promise I'm done begging for likes here. It's YouTube, right? Make us do this on YouTube videos here. Let's now dive in right now and talk about the tick charts. This is the recipe for a slingshot. This is what slingshot reversals are made of. It's a strong run down. Again, strong run down, big clue. It wants to retest that low before we resume the overall trend. Anytime, right? Anytime I see a bullish market overall with a strong run down, all I do is look for that retest and resume the overall trend. Screenshot that, write that down. I'm telling you right now, there's easy money to make on retest trades after these big strong moves down. That's one big clue. And then what really puts the cherry on top, what makes this a slingshot reversal is the range in the middle, right? That's what makes it a slingshot. Because now, as we pop up here now, if we roll lower and take out that low, now what do ranges do? Ranges love to rotate, right? The amount below, the amount above. And again, when this thing snaps, when those bears get trapped down there, it will just swoop and slingshot right back off that low and potentially all the way up to take out those recent all-time highs. So all of the bear traps I talked about earlier on the S&P, including, by the way, that measured move technique. The measured move technique almost never fails on us, right? So keep it in mind for tomorrow there as well. Let's now talk about going higher here, all right? Because again, going higher here, this could be a bit more challenging because, well, for example, with that strong move down right now and all of these areas of resistance up overhead, the first thing is be very careful, be very suspicious of a fake out breakout. This could easily break out higher and then wind up basically pendulum swinging, symmetry, right, above, below, and we might wind up with a bear trap down there. So just be careful if we do go higher here. This could easily get whacked right back down again. Now, here's a question. How could I sell that move going lower? Well, first of all, it's against the overall trend on the hourly time frame. So for me personally, it would always be about a half size position or a quarter size position. We talked about this a lot last night, right? It's called a crown reversal. The way I sell something like this is a crown reversal pattern. It's buyers trying once, it's a lower low, it's buyers trying twice. Lower low, above that high, this is where bears are going to be looking for. Just like today, I'm thinking about that high right there. They go up a couple tries right there above those highs. Bottom line is above these highs are where everyone is looking for that short. Now, again, this is not the highest percentage trade anymore because, again, we're bullish overall on the hourly time frame. But that is the way you trade it if we want to short this thing back down again. Again, mark the amount above, the amount below, and we now look for that roll back higher using all the bear traps we talked about earlier on the S&P. So one important question though is if we break out higher, is there any clue that would tell us it's a legit breakout? Is there anything going higher that might say, oh yeah, get ready for a breakout? Yes, it's the moving average. The 21 EMA tells us pretty much everything that we need. For example, if I see a strong run up and I pull back right away to that 21 EMA and I start seeing buyers struggle, yeah, there's a good chance we're going lower here. But if I see this thing break out going higher, if it breaks out going higher and I see a shallow pullback, and a high, you see what I'm saying right now? If I see that shallow pullback and that higher high in price, what does that tell you? What does separation tell you? Separation tells you strength. Combine that with a higher high, and now we have what? Now we have our first entry on the breakout. Okay, these are very simple. These are technical bear traps like I teach in the free video course. Right now on these ones, because we're buying relatively high, again, I'll go half size. I'll go quarter size on this technical bear trap that we see going higher here. Now, remind me again, what do breakouts like to do? They like to complete measured moves. Now, this may not be all the way back to all-time highs, but this is the technique. The breakout leg, measuring leg. Use that as my target. Guys, the easiest way to make a lot more money in trading is to hold on to your winners longer, right? Let your winners run. We all know that, but it's so much easier said than done, isn't it? This is an easy technique we use. Just remember, anytime we see a range breakout, the breakout leg is always the measuring leg. And then this comes down to a matter of being disciplined and holding that runner up to that measured move. Now, that is the first step in a breakout. It's that separation away from the moving average, getting in below that low. Pretty easy one. Now remember, ranges love breakout pullbacks. So think about now the edges of the range. Okay, write this down. The money is made around the edges of a range. The edges of the range. For example, we now know where those prior highs are right now. Now let's look for what is usually a two-legged pullback, sometimes only one, but usually a two-legged pullback. It'll pull back around, again, the edges of that trading range. Now on this one, remember, we're overall bullish on the higher time frame. We have a lot of strength now going higher. Remind me again, what does a strong move tell us to do? It tells us that buyers want to what? They want to retest the high. Just like strong moves down, want to retest that low. It's the same stuff over and over again. This one, this situation now is more bullish. So now we know where the edges of the range are. Now we know we've got that two-legged pullback. My favorites, by the way, are a bit more than a measured move. So don't be afraid if it's a bit more than that 100% extension. And what do? Do we blindly buy right there? Do I look for a divergence on my favorite oscillator, maybe some RSI or MACD? You can if you want, but I've never personally, and I've helped thousands of traders, almost 20 years of coaching. It's incredible how fast that time has flown. I've never seen anybody make consistent profits with indicators. I always like to run traps, right? Run stops, right? So as you pull back now, the only indicator I use is a moving average, right? So as it pulls back now, moving average comes down now, trap them in, right? Trap them in, bears once, bears twice, run those stops. And again, remember, if I can squeeze this thing in real quickly, separation, higher high in price, it's that same add-on pattern we always talk about in these videos and look for in our trade room. Guys, if you look up the definition of a breakout pullback in the trading dictionary, this is what it says, right? This is what it says right here. It's a one leg, two leg, again, breakout, measured move into a two-legged pullback, trap the bears in, add to your winner, and whatever you do, leave that runner. You did all that hard work to build the entry. Now don't go cutting that trade too early. Leave that runner back up to retest those highs. That is a classic, a true breakout pullback over and over again, no matter what market you want to apply it to. But let's talk some variations, all right? Because one very common variation, especially as everyone's waiting for trade deal updates right now, is a pop-up into a trading range. Now, if you've been paying attention tonight, you probably know kind of what this will look like now. Very common. We break out a range into a new range. Like over here, right? Had a range right there yesterday. We break out into a new range. If we break out again, if we break out one more time here into a new trading range, now remind me again, when we have two ranges stacked on top of each other, what does this tell us? Well, first of all, that previous range is begging for a breakout pullback, right? Breakout pullback. Breakout pullbacks are very, very common. Okay. Second thing is this new range. That new range wants to rotate, doesn't it? It wants to rotate, right? It wants to rotate at the low, up around that high. So you can probably already tell what the game plan will be on this one. If I get a pop up into a range here, I'm going to look for that pullback underneath that trading range. This will feel very much like a revert. It'll feel very convincing. But remember, that new range, that's your new magnet. Okay? Remember this. The most recent range is the magnet. The previous range is the breakout pullback. Okay? That is money, right? That knowledge will keep you out of trouble 99.9% of the time. So new range, that range, the magnet. Previous range is the breakout pullback. In comes the bear breakout. Rookies think we're now bearish. We trap those rookies in. We assume it's rookies because professionals would not take that trade at all. And we snap that sucker back up again. And again, remember, if there's one scenario that's easy to leave your runner or add to your winner, it's a range rotation, because now you know the amount below, the amount above, and then as we keep going higher, what do? We add to our winner. Higher high, separation. I won't beat this drum too much more in this video. You guys get the point now, but add that runner going higher, right? Leave that runner going higher right now. By the way, I love this scenario for tomorrow. I would not complain whatsoever if we get that tomorrow morning in our trade room. And then please don't forget, remember that rotation, it cuts both ways. So if we pop into a range here, we pop up in a range here right now. Be careful if it goes higher first, then cranks back lower. Now this, I'll tell you right now, talk about a scary trade. Remember guys, the best entries, my biggest profits over 20 years, almost 20 years of trading here, have always been the trades that are always the scariest. This will be a very scary trade. It will feel like the world is collapsing, right? Because it rotates off of that high. But remember, you know better. Right? You know better. This is not a reversal. It's a range rotation. It's a beautiful potential breakout pullback. So don't take the bait. Don't be a rookie. Don't be ignorant on this. Trap those bears in. So bear trap, rotate the sucker back up again. The amount above, the amount below. Don't get fooled by the rotation off the high. All right, guys? Having some fun with you all in tonight's video. That's the game plan for tomorrow and some variations for tomorrow. What do you think, guys? Let me know in the comment section below. I would love to know what your favorite pattern is for tomorrow. So let me know in the comment section below. But again, anyways, that's the game plan for tomorrow morning. Now, speaking of tomorrow morning, the place to be every morning, opening bell in our trade room, 8 o'clock Eastern time. Guys, the easiest way start making money in these markets is to learn and trade along every morning at the opening bell. I'll put all the important links once again. You need started in the description of the YouTube video. Start first with that free video course. Enjoy all those trade examples I include in there. You're going to love that free class. Then come join me in the trade room and we'll do it together. In the meantime, guys, hope you learned a bunch in tonight's video. Hope you use this knowledge to earn a bunch tomorrow. Be well out there. Be nice to each other, will ya? And you better be here next time. Adios, amigos. Bye for now.